CIO for several family offices, and they've been doing an outlook with secular trends that they identify, and you'll hear in separate. You hear there are 6 transformations that they focus on right now, and every week they come up with a macro topic and help educate us. And then, so I think you're making use of slides from 2 past recent events that led to this 2040 spotlight. So take it away.
Thanks, Mark. And actually, the reason we're combining the 2 is I found that in yesterday's meeting, for some of the families, they were more interested in the near term than the 20 years out, because that's where their focus is. So we're going to kind of combine the 2 to cover, what's going on short term and what are some of the big trends long term and how do we think it plays out. But clearly the global economy is doing quite well right now. And as you can see, we had obviously a challenging year last year from the pandemic, which is tragic. I mean, we were talking about India before, and on yesterday's call, we had, yet another person who lost a cousin recently. And, the loss of lives and livelihoods cannot be understated. And one of the, clear things about a pandemic is it has no regard for race, religion, or nationality. And the challenges that exist today are broad on a global basis, and every country is still in a fight with COVID that seems like it'll go on for some time, even when you get vaccinations going. But really, the unevenness of what's going on in the economy is one of the challenges and also the opportunities for investors. So we want to just touch on some of the unevenness and where the divergences are and why we think they are, and what are some of the implications. Then we'll talk about the 2040 trends that we think are going to play out and really impact how we should be thinking about investment strategy. So as you can see, it's nice rebound and still strong growth into 2022, mainly because of all the stimulus that's been put into the system and also the pent-up demand that exists globally. You're going to see, as the lockdowns end, people returning to the things that they hadn't done, and there's trillions of dollars of pent-up savings ready to go, not just on a consumer level, but also on a corporate level and on a government level. And the needs are big coming out of this as well. So one of the challenges for the near term is the output gap and how we close the gap and how that's going to work. And this chart looks at 2 levels, the advanced economies and emerging economies. As you can see, if there's nothing above the line for 2023, 2022, it means that the gap is still persisting, and that is actually part of the divergence. I'm surprised China's gap is where it is. I think it should be in a different level, but these are figures from the IMF as reported by the countries basically to the IMF. So in some cases, take it for what it's worth. But we think it's really going to be in a global economy that's running at multiple speeds. And a lot of that has to depend on where the countries were coming into the COVID economically, the speed and magnitude and effectiveness of their policy responses. Not all could put a lot of money to work. What was their healthcare response and the status and structure of the healthcare system going into it? And then we were just talking about who's getting the vaccinations. Most of the vaccinations are highly concentrated in a small number of nations, and the broad population is still being woefully unserved in terms of vaccines. So economically, we believe it's a 2-horse race right now, with the US and China clearly leading at the turn as we are coming out of this pandemic period. China was very effective at managing their responses early and were able to lock down broad parts of the economy. I don't think other countries, including the US, took it the way they should have, as seriously as they did early on. And then we kind of worked our way into it, but they certainly got the hit stride in the US, and we put massive monetary fiscal response to it, with more to come, with President Biden speaking soon about future spending plans. So we're going to get 75% of our residents in the next 3 months if people are willing to get vaccinated. I think that's one of the challenges. And if you go back a couple weeks ago, a country like Canada, right across the border from us, which should be able to really benefit from it, has had woeful response in terms of getting vaccines. and they're struggling, and they're in the third lockdown in Toronto. When you have Ontario, when you have those types of divergences in advanced countries, think of what it means for the developing nations. And that leads to the rest of the world. Very ineffective health, monetary, and fiscal responses, mainly because of either the infrastructure inside the countries or the financial positions where they stand today. And then you have half the countries not being, having even 1% of their populations vaccinated. And this leads to big concerns over the long term. But as I said, things are getting better and there are big opportunities to make money. And you're seeing that in the resurgence of the manufacturing sector. The servicing sector is coming along as economies open up. So overall, we're really positive on the near term and the opportunities to make money in public and private markets in many areas around the world, but particularly with leading nations in the US and China, and some European leaders, but really it comes to stock selection and being in the right areas with the right themes. And they're all the themes we're talking about, whether in public or private, whether it's AI or the tech boom, productivity improvements and the like. Those are going to be the drivers, and healthcare is a big one. When you go by region, still the same positive trend, but certainly the magnitude of the rebound in certain areas is going to be quite different. I think these numbers are masking what is an underlying divergences on a country by country basis. And that's something that we're going to have to really remain very focused on as investors, of where you want to see the opportunities. You know, we talked about the populations and the challenges there. I'm not going to spend much time on it. We've seen the cases going up, and you guys were talking about India at the start, and this is even getting worse. And think about it, we're not even confident in a lot of nations, even the developed ones, about their reporting on this. And therefore, the belief is a lot of these numbers are understating the actual challenges. Brazil, another area where you see big moves. So one of the challenges for the divergences is the faster you get in and out of a problem, the less economic scarring there is. And the challenges with economic scarring, and if you hear from the central bankers and a lot of, I think, thoughtful leaders around the world, scarring is one of the big issues. And for those who were, involved in Europe in the early 80s, and Ireland would be one of the cases, high unemployment, led to a lot of loss of human capital, and the disengagement from the workforce has long-term implications for an economy's productivity. You end up also with weak investment when you have economic scarring, because you're spending so much to deal with your debt loads that it slows capital accumulation, tech adoption, and therefore you lag in productivity at a time we all need to be more productive. You end up losing specific knowledge, bankruptcies, you lose productivity growth there. And in countries that, like Brazil right now, is struggling with the pandemic is keeping people out of school. So if you're out of school for a year and a half or 2 years, you actually fall behind quite a bit. So you actually, this is where all the human development discussions are really starting to pick up. It also leads to misallocation of resources because of shifts in demand. But there are a lot of positives. The return to pre-COVID levels for a lot of nations is actually happening right now. And it's happening, I think, a lot faster than anyone expected. So we're seeing this big rebound. Tech and innovation are going to continue to accelerate. And we always find it fascinating when you talk to a lot of people, and we're in it and we get it and we're seeing it firsthand. But a lot of the investors, a lot of the market participants don't understand that we're in the early innings of tech adoption, not in the middle or later innings. We think the best is yet to come, and that's going to create big opportunities and big shifts in where opportunities exist. So we still have labor force problems, and this is the scarring issue. And if you look at the bottom, in the advanced economies, the prime age youth unemployment levels are still going to be high, and their participation rates are declining. And that's a big problem. It's the same in the emerging economies. That is one of the challenges for government leaders. So for our takeaways on this, country inequality is going to remain quite high. Capital will flow to a few nations, and capital controls are going to be a bigger issue, particularly for struggling countries. I think this has implications for crypto. You've seen that with India and Turkey trying to put bans on cryptocurrency, China starting a digital currency. We think capital flows are the primary issue around that, control of their economy as well as taxes. You now have the threat or the proposal that we're going to have maybe taxes on crypto. We think there's going to be a shift that's going to move to more stable, but there'll still be an opportunity for crypto. It's too small a market relative to the global economy, but there will be changes coming there. We think that there are concerns about overheating. We've traditionally been in the camp that inflation is going to be struggling and transitory. We're now thinking it's going to be a little bit higher than we were originally planning on it being, and will take a little bit longer before the transitory nature comes in. But we think productivity is going to really force things down, and the big themes exist. So, Mark, if we jump to the trend slide, I'll stop sharing. If you can put the trend slide up. So for those of you who were on the call yesterday, we have been talking about a report put out by the National Intelligence Council, and they're focused on 2040 trends. And the National Intelligence Council is basically 19 US government agencies who don't make policy, but they help inform policy by creating this report every time a new administration comes in. And they try and identify key themes that are going to be the drivers of how we behave, both on a government, corporate, and individual level. And then how does populations going to react to the changes that are going on? So they identify the key trends and how do we react to it and what does it mean? So the outcome of that report is the big issues are these shared themes that we have of climate and the like, but the world's getting more global, but it's creating more fragmentation as we get segments of populations inside countries and globally that are being left behind and disenfranchised. And that creates this smaller global community, but bigger challenges inside and bigger divergences. And you see that play out in elections around the world and the changes that are going on with who's in leadership. We also think that it's creating more disequilibrium, which creates opportunities for investors if you're on the right side of that. But we're always in a state of disequilibrium in the global economy. It's just that this period, because the pandemic is seeing more exaggeration of the disequilibriums. And it's also creating a world that's going to be more contested, both inside countries and societies, and then also globally. And that's creating these tensions that are going to persist for some time. And the key issue is how do you adapt to what's going on around the world? The human development and demographic challenges are big and have been really understated and underworked by governments. And we think that's going to drive things forward, put more emphasis on there. So skills training, upskilling, and also just education is going to have to pick up. And we're going to have to help the countries that are left behind, I believe. The environment is a big issue. Economic divergences continue. How do we deal with the debt? How do you get return to normal policies after central banks have put so much money into the system? Those are all real issues. And then you have fintech and other changes that are impacting that. And also all the technology advances, who wins and who loses there are going to be big issues. There's a really interesting article in the FT today from Martin Wolf, and he talks about the big issue that's out there for the US and China tensions and how does that play out. And I think we're both underestimating the other countries. So, whatever country you're in, you think the other one's going to do better, or you think they have much bigger problems, whichever your view is. But it was fascinating in this report to look at, in this article, to just look at the strengths of both areas and the beneficiaries of it. But we always shortchange China's ability to continue their economic miracle in the US. But their strengths are continuing to grow. They're leaders in patents. Last year in science, I think they had something like 59,000 patents awarded. The US had 57. So it's a big move. And China has actually been leading in patents in all the key categories for tech that are all the things that are in areas that we're investing in, whether it's AI or blockchain or go through the list, cyber. So that's big opportunity. Their middle class is a big opportunity. Their ability to create industrial infrastructure and the like continues to be a big opportunity. The US has big opportunities too. We're geographically a very desirable area. We do have a pretty good population mix, although all the developed world, the US, China, and many other nations are really in a demographic crisis. We have nice resources. Our capital market system is quite strong, but when you look at innovation and where we stand and where other countries stand, it's really pretty interesting. And I have some numbers I just want to share with you. If you look at the public markets as an answer for how we're doing, the U.S. has roughly 7 of the top 10 largest companies in market cap. They would have had 5 of the top 5 if, except for Saudi Aramco. They would have all been U.S. tech companies. But it's not just that area. If you go into healthcare and biosciences innovation, we're have the largest companies, something like 7 of the top 10 there and 14 of the top 20. But other countries are coming along, and they're coming along strong. Innovation is not locked into any one nation, but certainly the manufacturing of chips and other things are, and who has the natural resources for it. So I think that sets up a very interesting dynamic, and that gets into the big scenarios of 2040 scenarios, which the National Intelligence Council came up with, was 5 of them. We have this renaissance of democracies where the U.S. and other countries lead coming out of this period, driven by our tech advances, and it's really public-private partnerships. But if you think about it, if all the democratic societies form what they had prior to the Trump administration of closer alliances, you have basically 45% or 50% of the global economy right now partnering together. That results in greater innovation, but they all have to renew trust. I think one of the big issues globally between populations and governments is trust. Whether it's on China's side, the US side, Russia's side, it doesn't really matter. The way societies are evolving, in the Middle East, the same thing. Trusting government is lacking right now, and that's stifling innovation. The first one, this has China and Russia losing a lot of their innovators, scientists leaving and immigrating. And there's a statistic I gave yesterday that since Putin came back into office in 2012, Russian scientists are leaving at a 5-fold increase, and we can't have brain drains going on. The world adrift is another scenario where leadership fails, and we're troubled by slow growth, internal divisions in countries, which lead to political paralysis, and we don't make the long-term investments that we need to make. That void allows China to step up and play a bigger role in that scenario, and continue to expand, but nobody can kind of take the leadership there because of the problems that exist all over are too great. Global competitive coexistence is another great area that I think is the area that a lot of us believe in, as Mark has highlighted, Kissinger believes will be the outcome, where we realize that military fights are not the way to go. Cyber is going to be a kind of a probing that we used to use with other kind of missile tests and the like. And that you see a world where we prioritize economic growth because that's what's going to serve the population's biggest needs, restore trading relationships, and we kind of work side by side in a way that we think is okay. But we still compete and we still try and get the edge on each other. I think that's going to be the world that we live in there. And Mark, if you can switch to the next slide, if we have it up. And that was the separate silos, which is really the rollerball economy. And for those who are movie buffs, where you have these kind of economic blocks that are for economic and security. They vary by size and by relationship. And in this world, a lot of people get left behind. You end up, the countries that don't bring a lot to a block could be subject to failed states, and we could see growing failed states. But within these blocks, you share information, you protect yourselves, you trade, and that reorients supply chains, which is not very efficient way to go. And the last one is the world really faces a crisis that forces us to deal with each other on a much more equal basis, and you revitalize the NGOs and multilateral institutions, and you move forward in a more collaborative approach where the problem's so great that the rich nations help the poor ones, and everyone tries to come out of this crisis. Those are the scenarios put out. It's an interesting exercise. It's not a given that any of these actually play out. More likely that elements of all of them play out, but we still believe they're big opportunities to make money. They're the areas we've all invested in, but it's always good to have an eye towards the future to invest for the current, because the future gets here a lot faster than you always plan for it to do. So, Mark, I think I went a little long, but there you go.
Oh, good. I was just thinking, since Who knows what when we refer to rollerball? Who knows this movie?
Really,
I remember it, but I can't remember it in detail.
James Caan cult classic, where you guys have been. Remade recently too with Chris Pine. So it's I'll have to drop that one, Mark.
I'm going to show it for cultural benefit. Here we go. Wait a minute.
Games created to demonstrate the futility of individual effort. Champion defeats the meaning which the game was designed, then he must lose.
I'll move it ahead.
Mark, we should have Jonah see if they can come up with a game for this now. Oh, this you want to get off.
So, but the premise was there were these blocks that were formed around the world, and everything was nice if you played inside the block. So
And that's how they fought the wars, was through the skirmishes were done through the rollerball game.
Indeed. All right. So back to 2021. That was 1975, by the way. I was 7, and I remember that movie. But we've asked, panelists just to kick off, introduce yourself and your thoughts on 2021 and 2040 as you're seeing it. So, I guess if we go across I'm curious if you don't mind if I start with you, Mark Shmulevich. You're sitting in Singapore, and everyone has maybe heard this story that I called Mark in 2018 and told him we're having our first conference in New York, and he looked at his schedule and said, "Well, that means I have to leave in 10 hours," and he did, and he made it. And but I'll let you answer those questions if you could, Mark.
Thanks, Mark. I think right after that moment in 2018, I got to learn how to make quick decisions and not to overthink. So thank you for teaching me. All right. I live in Singapore. I work mostly in Asia, based out of Singapore, and also in Israel, deeply in artificial intelligence space, where I'm also operational. But in addition to that, supporting research, commercialization, and investing in different technology spin-offs in various areas. I was thinking about what I want to share today. It's hard for me to think about the outlook till 2040. It's just a too long time. A lot of things can change. But when you're trying to spot early stage trends in technology, I think the outlook for the next 3 to 5 years is extremely important. So I felt there are 2 things I want to share. One is about what is happening currently and what's going to happen in the next years in the world of AI and machine learning. There are several trends that might be not clearly seen from outside of this AI era, but I would like to share. One of them is that AI is quickly becoming something that is being delivered from the cloud. It's like when electricity just appeared, there were a lot of projects when you electrify something, and this is a lot of services, and this is kind of a special profession. This is the case in artificial intelligence now, but this is vanishing. Even if you compare what's happening this year to what was happening 2 years ago, probably at least 20–30% more projects have moved from contracting a specific AI solution provider to contracting Amazon that can do that from their cloud. And this is how we're going to get machine learning services for what we need. So from the investment perspective, it makes much sense to rethink cloud, because cloud is actually going to be bigger than many people think Now, it will not only be the cloud today used for some computing, for storage, it will be also cloud that incorporates everything we do without cloud today in artificial intelligence. We already see this trend. The other trend is that various areas in artificial intelligence are getting consolidated. So those of you who know the space might have heard about RPA, robotic process automation, a fast-growing space. There are a lot of multi-billion-dollar companies in this space automating simple tasks. And then there are more complicated things like intelligent document processing. So this is becoming one space. And in the future, there will be conglomerates doing all of that. So as a large company, you will be able just to have one contract for everything. All in all, the key word for what's happening in AI is consolidation. And the second key word is cloud. So if you're investing in that area, my recommendation would be to look at those two things. And the other area I wanted to share about is hydrogen energy. This is something new to us. So I didn't speak about that last time I was here at the 360 conference, but we started looking at what's happening in research that is quite close to commercialization in the area of new energy. And hydrogen, especially hydrogen fuel cells for heavy vehicles, is something that is hot, and it is hot because it is really promising. We do believe in this area. There are quite a lot of companies right now, but there are many more things happening in academia. That these are not the companies yet. They will be in the market in 3-5 years. It is highly likely that this direction will lead to some real products that will transform how we fly, how we go by car, and heavy cars like buses or trucks. And some of that is already seen, some of that is a bit more far away, especially in aviation, but we believe in this happening in the next 10 years. It means that the investment period starts now. That's it.
Just let people know where you're investing. You have an interesting model with universities.
Yeah, the model that works very well for us is partnering with the university first. You choose a university with a strong set of research groups that are clearly focused on commercializing what we do. So we optimize not by the number of publications in Nature, but we optimize by the commercialization outcome and how determined the team is to commercialize technologies. We have one institute in Tel Aviv University. We have another one that was launched just last year in Arizona with Arizona State for smart city technologies. We're working on another one again in Israel with Technion. You support a lot of research projects by various special commercialization grants, venture building studio, and then I have the right of the first refusal. And the same people are very likely to work with you as an investor a bit later, which might be 3 years later when they're thinking about the first external funding round.
Excellent. Thanks, Mark.
Thank you.
Any quick questions to Mark? We'll have it more later.
Hey, Mark, just a quickie on the hydrogen one. I was just reading a newsletter the other day who was touting that quite highly. And the hydrogen issue has been around for a long time. Where would you say we are in terms of commercialization, of the technology? Is it still kind of in development, or are we almost there as far as, larger scale commercialization? What do you think?
I think it's a matter of less than 3 years. So it means we're almost there in my understanding. There is a technology called high temperature fuel cells. There is a longer name for that, but it's high temperature hydrogen fuel cells. And seems like this technology works. There are several companies. You can look at HighPoint, you can look at H3 Dynamics. There are several companies working with these technologies, and all of them are partnering with airplane manufacturers, and looks like the whole concept fuel cell, powertrain, engine, and the airplane itself can nicely get together in the next years so that the companies can demonstrate that the energy is sufficient to get a heavy airplane to get from point A to point B without using batteries. Wait for 3 years.
Thank you.
I asked Brian Johnson to pop on because it's an area he follows.
Hi, Mark. The wonderful thing is we're in the same time zone, and I, for one, I think I'm more sober, at this time zone than I am in a typical conference where it's midnight. Yeah, so hydrogen is very exciting, and that's also an investment area for us. We're mostly engaged in the public equity side, and one of the things that fascinates me on that side, really, as you've alluded to, is the bigger form of transport. And one area that I'm narrowing into really is container shipping. I think there's a huge potential in that front, and I'd like to hear your thoughts on the potential on revamping and making, in a sense, global trade in a containerized manner, less I think more ESG friendly and less carbon footprint. What are your thoughts on that?
I'm bullish on that. Maybe we can have a longer discussion one-on-one, not holding everyone, but I'm bullish on that, and I think that overall, in this area, there is a milestone that hopefully will be achieved in the next years. We need to demonstrate that hydrogen generates enough power to move heavy objects for a long enough time without batteries. And most likely, airplanes will demonstrate it first. Like you can look at what ZeroAvia was trying to do last year together with batteries. It was not a fully hydrogen flight, but in 2 years, they're probably going to do another demonstration. And when it happens, more and more attention will move back towards hydrogen. And what you mentioned, this area will be definitely among the first couple of areas that will look at hydrogen, and then they might start using hydrogen within just 1-2 years after that.
Well, speaking of shipping, let me transition to you, Stephen Toy. It's an industry major energy users in terms of steel making and the steel industry or other things you're focusing on. Maybe your 2021, 2040 thoughts.
Yeah, sure. Thanks, Mark, and hello, everyone. Brian, to your question, so we do manage a big shipping portfolio with quite a number of container ships in it. I think we eventually get there. I think it's going to be a long burn before we do. And frankly, I'm probably more bullish LNG, before hydrogen gets implemented. If you think about just how long it took for the low sulfur emissions regulations to go through, right? For then the scrubbers to be put on about a year or two back now. Yeah, it's not an industry that moves quickly, and so I think it's going to take some time for the industry to catch up with the technology. But we do see some enthusiasm for liquefied natural gas as sort of the next stage of cleaner burning fuels in the space. On 2040, like I think it's a really interesting topic to focus on. It is much further out than probably many of us think about on a day-to-day basis. And so when Mark reached out to me, just thinking out 20 years, I thought, where were we 20 years ago? And coincidentally, it was sort of also in a period of one of the last big kind of technological booms, right in that late 90s, early 2000s. And we were pretty active investors in that period as well. And so, just a quick story from back then that I think exemplifies how far it's come. I remember talking to a small upstart company back then, and the internet was really just coming of age. And he said, look, there's only 2 business models that make money on the internet: porn and us, Google. And so think about how that's developed over 20 years, and technology, really follows. Essentially, something like Moore's law, which is it's not linear, it tends to be a bit exponential. So the next 20 years, and I agree with Stephen Burke, we're just getting going. And so where we're focused on today, we have 2 primary vehicles and 2 somewhat different strategies. And so our historical private equity lens has been more value oriented, more traditional industries, as Mark mentioned, steel, materials, transportation, manufacturing. And we also recently raised a SPAC vehicle, which focuses somewhat differently, same industries, but focusing on the cross-section of technology, innovation, and those traditional industries, because we think we are at the crossroads where technology is not necessarily its own individual industry now. It sits over top of everything. And so I proffer that every industry out there is being disrupted and transformed by innovation and technology. And so sort of our strategy is to sort of sit in both categories, whereby we own and we're in the boardrooms of traditional businesses, synthesizing what are the problems we believe we need to solve for the next 5 years, and also with our other vehicle, looking at what are the technologies, right? What are the innovators working on? What's out there? What's going to be out there? And how do those two marry up? And we think it's just a very interesting time in the investment world because, to a certain extent, every industry that we're involved with and look at is undergoing some form of disruption. Some bigger than others, but every business model is going to look very different. So certainly in the next 5 to 10 years, and by 2040, probably unrecognizable from where they are today.
Stephen, to what extent does those scenarios, they range from adrift and tragedy, as you think of political risk, or some of those issues being drivers or potential drivers and disrupting forces? How do you think of that?
Yeah, no, great question. And I think that's what makes this time extraordinarily interesting in that, right? Overlay geopolitics, overlay, right, deglobalization, right, which took multiple decades to right, have globalization take foot. And now we're sort of unwinding much of that.
Talk about the cleaner industry.
Yeah. And then throw on top of it, COVID, which was a bit of, kerosene on the fire on much of this, in that it was an accelerant for much. And so I don't know that I have a great view on which of the scenarios we ultimately end up in. I will say that, that the uncertainty of how all of these factors will play out in industry and just, in terms of how the world will operate going forward is quite high. We had one sort of interesting case, if you will. You'd mentioned steels. So in 2017, we had invested in a very large steel operation in China, and it was a nice microcosm of what's going on there, just as a nation. And how they're focused, in that there's a very large, very important steel mill that was on the verge. It was in bankruptcy. It was on the verge of liquidation, called Chongqing Steel. And so we had come in with a restructuring plan and recapitalization for it. It was a mess financially. It was a mess operationally. And so we invested in 2017 to take it out of bankruptcy. And it really, there were 3 legs to the stool of the long-term strategy. So number one, get the operation stabilized and get it operating on a globally efficient basis. Number two, we were looking to put in an electric arc furnace to take out one of the blast furnaces. And number three, we're going to upgrade the facility for basically intelligent manufacturing. And it really was a microcosm of where China itself has come from and where I believe it's going, which is, think about where we're coming from, overcapacity, smokestack industry with its primary, purpose in life to be, maintaining high employment. phase two, find a way to produce the product, but in a more environmentally friendly manner, right? China has pivoted from, to a consumer-led economy, and therefore it creates its own waste. So you can have electric arc furnaces and recycle the steel that's domestically produced, right? So that's a new space. So Europe went through that transformation, as did North America. And then third, where it really sits today is China's looking to make sure it stays out of the middle income trap and is focused on technology. And so we had a 5G provider, we had a data analytics provider, we had a sensor provider, and we were going to automate the entire factory of how steel is made, how you can measure strength and quality as it's being made, not after the fact. And so I think that investment for us was, I think, indicative of how we felt, that the trends within China were heading.
Gotcha. Well, I have lots of questions, but let's keep it going. Well, Bob, Garrett, do you want to, last couple of times you've invited people with perspectives on Vietnam, Indonesia, Malaysia. Do you want to sort of, maybe you and some of the people that in the region, you could sort of touch on these same questions?
Yeah, thanks, Mark.
I'm stepping away for 5 minutes. Stephen Burke, you're deputized. And
okay.
Actually, cool. You're deputized, Rob. You're in charge.
Nice. Okay. I want to pick up on some of the things that Stephen actually mentioned in his very useful sort of notes of introduction. I guess one of the things, I'm like Mark Shmulevich, sat in Singapore. I've invited Mikhail Crow and Alex Nergard and Mark Sung, who's here in Singapore, but working with a Filipino conglomerate family on diversification and investments that lend into their portfolio onto the call today. Just picking up on a few of the things that I took away from what Stephen said. I guess one of the things that we've seen in Asia is how well the health crisis has been handled, particularly here in Singapore, but equally actually, now very little is heard in Thailand, Vietnam. To a greater or lesser extent, Philippines and Indonesia have probably done a good job of just not reporting their statistics, which maybe has helped to divert the attention away from them. But I don't think that the COVID surge there is quite as bad as it is in India at the moment. And there is an element of being able to move away from lockdowns. And so Southeast Asia, is trying to keep pace with China in terms of emerging from the COVID scenario. Meanwhile, some of the big sort of news items, I'm sure people have followed it, are the things like Grab's announcement of its merger with Altimeter in a SPAC going public on I think it's the NASDAQ, maybe it's the main New York Stock Exchange, I can't remember. But largest, SPAC merger in reported history, and the largest sort of public listing of a Southeast Asian technology company. And I guess talking to one of the points that Stephen talked about, which is the fragmentation within blocks and the isolation of sort of stranded states. One of the things about COVID is that you've seen quite a resilient binding together between ASEAN states. And just last weekend, the sort of publicly derided junta that's taken over in Myanmar were even invited down to Jakarta for a Pan-ASEAN conference and sort of sent away with a set of protocols that the rest of the ASEAN states feel that they should implement. So there's active sort of diplomacy going on even in the midst of wider travel bans. And I guess talking to that sort of network effects, that it's probably a good point to sort of hand over and bring in Mikhail and Alex, his partner. So Alex, through his family, has backed Mikhail in an early stage technology investment strategy that's very much sort of lending itself to investing in that networks effects driven technology businesses across Southeast Asia. Perhaps they can give some commentary about, some of the trends. I think some of just my commentary on it is that some of the trends in Southeast Asia I'm very passionate about things like hydrogen and climate change and everything else that I think are 2030 and 2035 trends. But in Southeast Asia, perhaps more of the trends that we're seeing are just more about general things like mobility, access to finance, the rise of fintech, giving access to credit, access to consumer credit through buy now, pay later systems in places like the Philippines and wider Southeast Asia. During COVID and more generally just the advent of mobile technology, or the increasing penetration of mobile technology, and with gaming statistics. So some of the leading gaming organizations in the world are now growing out of Southeast Asia. So one out of Singapore, Razer, which about a month ago declared a large operating profit on pretty decent revenues, just under $2 billion revenues. And that's sort of symptomatic of the passion for technology in Southeast Asia, which I think the rest of the world is starting to look into. And as a final comment, I think one of the things is that, with the inability to travel, accessing these early stage startups in Asia is not for the faint-hearted for direct investors coming in. So it's via funds, and then the exits for those later stage startups. I think we'll see an increasing trend towards SPACs coming out of Southeast Asia. So we've seen the SGX, the Singapore Exchange, accept that SPACs could happen in Singapore itself. But it'll be interesting to see whether those companies, probably the next big one will be sort of Gojek's merger with Tokopedia, and then Gojek probably seeking to, or whatever they're calling it, Gopedia, or I can't remember, GoCo, I think, will seek at some stage in the next sort of year to 18 months to go public. And whether they choose to do that locally in Southeast Asia or go to the US will be an interesting dynamic to watch. But look, I'm no expert, so perhaps, Mikael, you want to talk about some of the trends that you're seeing in technology investment, and then I'll bring in Mark Sung, who can talk a bit about the dynamic in the Philippines, which in itself is a fascinating market.
Yes, thank you. So I'm Michael. I lived in Singapore for more than 10 years now, originally from Norway, and started a fund 3 years ago, Investigate VC. And I'm very happy to be here. And I just wanted to pick up from where Mark Smulovich also mentioned about that we shouldn't underestimate, the impact of technology and cloud solutions, etc. And I think it's very, very true. I think the change we're seeing now is just going to escalate, and it has been pushed forward a few years with the pandemic, where everyone, I don't know you guys, but I've been sitting in a board, a company I invested in many years ago, and I've been fighting to do simple things online, and I have pushbacks on it. But the pandemic came, and then 2 weeks later, we did everything online and saved tremendous amount of time. And these changes we have seen also happening, because if you see at S&P 500, the average lifespan of companies on that stock exchange or that S&P 500 was 61 years in 1958. And today it's less than 18 years, the average lifespan of an S&P 500 company. So, and this is just going to escalate. And I also I like to see the big picture. 60, 70 years ago, we saw PE funds growing up or, coming out because there were opportunities for mid-market companies to do M&A deals there and create value. Then after a few years, you got the VC funds that went in even earlier because the value creation happened earlier. And then you had the accelerators, Y Combinator, for example, that they saw, well, we can even take advantage of even earlier value creation. And now you have, for example, Antler, which is on the page there, that starts with just the talent and then create companies out of that. And I think then coming back to Southeast Asia, here there's also the region is taking advantage of doing step change, where, you know, for example, building up a huge network of bank branches. They're skipping that. So we see that they're actually leapfrogging many times what the developed world has done. So Rob spoke about Grab. That's much more as a super app compared to Uber, and they actually outcompeted Uber here in the Southeast Asian market. So there's going to be quite a shift, I think, in many incidents because of this. Another big trend I think we'll see, unfortunately, is within agri-tech and food tech, and that's globally, but also here in Southeast Asia. I think climate change, you know, I think we lost between 10 and 15% of the soil in the world has disappeared. More acidic oceans, deforestation, overfishing, etc. All of this will lead to the need for big changes in how we make food and how we distribute it too. But an interesting fact here from a CEO I know. He's CEO of one of the largest grocery store chains in Northern Europe, or was until recently, and he said to me that the last 2 to 3 years, the purchasing department had to cancel all their vacations because of lack of supply. So failed crops around the world had led them to scramble to put the regular food that's expected on the store shelves. So I think that's also a big opportunity. And then you add to this network effects, so which is a very powerful driver, which is behind 70 to 90% of all digital growth. I think that's in itself. Many say that we keep an eye on network effects, but I think we can keep an even closer eye on that, because that will fuel a lot of the change here, and also here in Southeast Asia, we'll see a 3x the next 5 years only in the digital economy, which will also surpass all the growth you see in the developed world, like North America and Europe, and also China. Yeah.
Cool, thanks, Mikael. And I mean, I think it's perhaps interesting, you know, we've got plenty of family office principals, representatives on the call. Alex, if you don't mind, you know, just to get a view from your standpoint, you know, you've backed Mikael and now become his partner in his second fund through your family office. Why is there such a strong link and such an appetite from Nordic investors for Southeast Asia? If I can ask that.
Well, I mean, starting off, I mean, so I'm from Norway as well. I've been in Singapore now close to 14 years. My background is actually from the maritime industry. So speaking to Stephen here as well previously. I've worked in both on the ship owning side, but also on the maritime finance side for a decade. So our sort of, I'm also running then our family office, which has been in existence for about 10 years. So we're fairly young, but have a fairly diverse portfolio. We're doing a lot of public things, but we also founded actually a few companies in Europe. Some of them are listed today. And basically, so I mean, when we started looking at what was happening in Singapore, we worked, you know, fairly close or have at least good connections with some of the government organizations here. And when they started looking at innovation and investing in innovation, we obviously paid attention. So that was really the starting point for us in terms of whenever a government says that, okay, we're going to grow innovation in Singapore and we're going to do it properly. And especially in Singapore, I think people that know Singapore, when the government says something, they actually do it as well, and they do it properly, which COVID is also a good example of. So we started looking on what to do, and that was at the time when Michael was setting up his first fund. So we became the anchor investor there, and basically had an arrangement where Michael would bring me along to the companies he's looking to invest in. So as a learning experience for me as well. But we actually ended up co-investing in, I would say 70% of the portfolio companies that Investigate invested in. So for me, I mean, this has been super exciting. It's obviously also been so far, I mean, unrealized, but it's looking good. So we're super excited as well to continue supporting. And for me personally, from our family office side, we have taken restructured our portfolio mostly and are now long only. So it makes sense for us as well to, or for me personally as well, to join the team and really support that sort of growth going forward. Why Southeast Asia? I mean, I've been there for 14 years. I know the area very well. I've traveled all around Asia for a very long time. So again, from my shipping background, but it's still, you know, I see a lot of the changes in the various countries and how they developed and so forth. I think from the tech side and as Michael was alluding to as well, I think there are two things. One is obviously if you compare to Europe, for instance, and especially Norway, which is a very I would say probably a rich country, but still a very small country. And some of the technology companies that we have invested in has been sort of rebirthed here in Singapore and in Asia, where you know, they have done a good job in Europe, but they have seen that, you know, can bring the same sort of background technology to Asia and scale it much quicker. So that's one thing, but obviously digital growth is big here, and as Michael was saying, it's predicted to grow 3x in the next 5 years. So that sort of supports our thesis as well on underlying macro growth. But I guess one of the things which I find interesting as an investor is obviously as well in terms of where companies are in the cycle when you invest and valuation rounds. Because obviously if you look at startups in Europe and especially in the US and the raising seed capital, for instance, the valuation rounds tend to be, or the valuations of the companies tend to be very high. So for me, I've always had a problem with sort of looking at very high valued companies that don't necessarily have any revenue or have any product. They might even be pre-product, right? In Asia, we see at least the companies that we are paying attention to, we see that they have gotten quite a lot further in the cycle before they start raising serious capital. And regardless of that, they are still not necessarily asking for a super high valuation. So I think the scalability is there here, basically. But I also think that that it's a good entrance point basically in terms of when you invest, and then obviously being able to follow on investments as well. So our thesis is that we'll invest on seed stage. We have a couple of requirements for the companies to have revenue as well, or not necessarily have a positive bottom line, of course, but at least have regular revenue. And we will basically follow the companies through to Series B as well. So that's our thesis, and following the network orchestration model, which, as Michael said as well, we think is behind really the growth in the digital economy today. And the portfolio companies that we have in the first fund is really a proof of as well how quickly they have been able to scale, and now have also successfully closed new rounds. So that's sort of my thesis here, but yeah, happy to take any questions, and happy to discuss a bit more about maritime as well if someone wants to do that.
I'd love
Cool.
to, but maybe we can't keep it going, Robin, just in the interest of time, but that's,
Yeah.
that's
So Mark Sung, unfortunately, had to drop off because dinner was calling. But if anyone's interested to connect with him, he's happy to connect. So he works with the outsourced investment fund that's been set up by the SM Investments Corporation family, which is the largest sort of retail malls operating family in the Philippines, who have diversified in financial services and a bunch of things. And I guess I'm not an expert on the Philippines, so perhaps Brian can talk to that a little bit. But I think the dynamics in the Philippines are sort of like the wider Southeast Asian story. I think the special and unique thing about Singapore is it tries to remain globally relevant on the global trade routes stage as well. So, you know, very much driven by GIC and Temasek and EDBI, as well as the sovereign functions here, investing in, you know, everything from hydrogen technology and you know, containerized AI, and everything relevant to you know, Singapore, including food supply, you know, for a small nation that can grow very, very small proportion of its food. So for a tiny island nation, we see a lot of innovation here, and it's a pretty exciting place to be. But happy to chat with anyone who wants to talk about Southeast Asia dynamics or connect with other people in my network. I'm always happy to link people into other people I've met out here.
And Mark, just one comment on the discussions from both Mark and Robin and others is last night's report from Google had cloud up 46%, and for Microsoft's Azure was up 50% year over year. So, you know, we talk about, you know, the markets and where people are and all that, but Justin Trudeau said a couple of years ago that the rate of change has never been this great and will never be this slow again. And I think the whether it's public or private, the challenge for investing in tech is the future revenue streams and not underestimating them, because I think that's one of the really unique dynamics that we're seeing play out in both areas. And if you want to know how that's going, just look to Amazon, you know, Google and Microsoft to see what innings we're in. And Nardella has been saying on a regular basis that we're in the, you know, first, second, third inning, not the, you know, the latter stages. So while valuations may look a little high, when you have growth rates like that for big chunks of your business, it really sets up for, we're still just at the start.
I'm on mute. I owe you all a beer. I said my wife works for Google, and she wrote me a text that we crushed it. So, but I wanted to show, as we think of new events, because we are looking from the four axes, like the asset classes, industries, profile types, and geography. And if you sort of keep that in mind before we switch to the next speaker, because I think of the events we want to do together, you know, that I'd like to, if everyone to be thinking if should we do a Southeast Asia tech focused event to really dig into this. And I like to if Alex is got the, you know, and or even Antler, where you've moved on, maybe we should be holding stakes and tracking and hopefully adding value in that way. So that's one of the things I'm going to be following up on. And part of it is just to do these events that are more focused, so we can really get on, you know, we're just scratching the surface here. And what the slide I was just going to show is this one. As everyone's seen, it's like, this is how our community helps each other, helps educate each other. So this has been great to pick up Asia once a month, but I think we should be doing it better.
Mark, what about both the technology side of Asia, but also healthcare? I mean, because they do have, I mean, as we've been discussing before, we've seen a lot of the emerging countries have a younger population, but obviously some of the more developed countries have an older population. And with health tech and a large disparity in terms of investment dollars across countries, I'm hearing a lot coming out of Japan that they're looking at using their corporate VCs for lots of investing, but would love to kind of hear other people's perspective on what they're seeing throughout Asia, also on the healthcare, on the tech side, but also the healthcare tech. Just because it seems like that is a larger part of developed countries' investing budgets.
Anyone have a health tech view for Asia?
I mean, I'm in the general partnership of a US family-backed health tech fund. And look, in my conversations with families and institutional investors in Asia, sure, there's tons of appetite. You know, there's tons of appetite to get into healthcare. And I say that from the point of view of a generalist. What I would say is that the healthcare systems in Asia are you know, very concentrated around certain cities, and they are nowhere near as widespread and diverse as they are in the US or even in Europe. And so there's a lot of technology transfer to come from the US. So I think that's an interesting space. To your point about Japan, I mean, I'm very happy to bring on folks from like Saison Capital, who I know are also invested in Antler. You know, they're one of the bigger corporate VCs who do fund of funds into Asia and globally, and are exploring global emerging markets at the moment. And bring on some of the healthcare system guys that I know here for a specialized deep dive on health tech and broader tech in Southeast Asia. So for sure, you know, between myself, Michael, Alex, you know, Mark, and all of our networks, we can put together something interesting. So yeah, for sure. And yeah, there's a bunch of stuff. So we can put our heads together and say, who can we bring on? And if you guys tell us what it exactly you want to hear from the States, for sure we can get some expertise to talk to, you know, the trends and analysis that they're seeing.
And on the transfer point, I think you'd see, Michael, what Eddie Vonderpart and Rich Sobel are doing in health tech. They've got a pretty decent pipeline there too. Well, should we?
Mark, I'm happy to contribute to that as well. I've done a number of healthcare transactions in Asia, and there's a massive cultural component that's missed with regards to how Western investors approach health in Asia itself. There's a huge misunderstanding as to how people want their healthcare delivered. And I don't necessarily think that technology is necessarily going to be the solution to some of the issues that we're seeing there.
Go for it.
You want me to elaborate on that?
Yeah, you got.
Sure. I mean, I used to work for an investor who thought that you could solve some of the larger healthcare infrastructure problems in India by creating a primary healthcare network, similar to the kind of NHS-style GP system here as a primary center for initial triage when it comes to everyday illnesses. Because currently, particularly in India, particularly in Asia in general, someone gets ill, their first point of call is to go to a hospital rather than going to a local GP, for example, which is what you would typically get here. So we actually tried to do that. So we built a clinic network of about 85 clinics all across southern India, predominantly focused around Hyderabad, and then other areas within Tamil Nadu, Bangalore, etc. And the idea was to create clean, well-designed clinics with one doctor, one nurse, and one pharmacy, one kind of generic pharmacy, all built in, which would be cheaper, better quality than the local doctor system that was available there. And frankly, it was an abject failure. And there are a number of different lessons that were learned from that. One, healthcare in particular is very, very personal. Coming in with something that's shiny and flashy, having a doctor that you've never met before, not being part of your community, is unlikely to be successful, because people would like, there's a trust component that comes from the healthcare, particularly in that neck of the woods, whereby they would much rather go to the local quack or doctor that they've known for a number of years in their neighborhood, who's operating from a very kind of unclean, backward-looking clinic, versus going to our shiny, brand new facility, because there's no trust. There's a new doctor who they've never met before. It's from hundreds of thousands of miles away, no idea about who they are, etc. And that's where I think this concept of using telemedicine in particular to solve some of the healthcare challenges in countries like India. I'm sorry to keep using India as an example, but it's probably one of the greatest markets for this. I think is ultimately doomed to failure because it tends to overlook this component. So therefore, how do you solve the issue? And if you look at how people do go to hospitals, how people do get treated in the region, they do go to hospitals first. Consequently, doctors in India in particular are very, very powerful. It's very well known for companies, particularly in the region, to advertise their doctors directly as the core reason for coming into the hospital. So you'll see doctors on advertising hoardings and the rest of it. Consequently, they have a huge share of the economics when it comes to healthcare operations, and that can make it very expensive to actually operate in those areas. The only way to do that really is to democratize healthcare in some way and to reduce the power of the doctors. And I'm not entirely clear as to how technology could potentially do that. What you have seen is successful in India from a model point of view is, eye clinics, dialysis chains, oncology hospitals, something that are very kind of super specific care, I think can be very successful. But I've yet to see successful technology application when it comes to healthcare in Asia in general. I've bought hospitals in Vietnam, in Philippines, attempted to buy stuff in Indonesia. It's been very difficult because it's been the preserve of families of the ilk that Rob is extremely familiar with. And it's quite a tough nut to crack, because obviously ultimately it's a volume game, and the private public component is very much driven by the penetration of the insurance market in each of those countries, which is still pretty nascent and underdeveloped. But it's a whole kettle of fish to get into there. But I think we're still quite a long way from health tech becoming a prominent player within the Asian healthcare market. Sorry for rambling.
So what are you excited about, Anand? Actually, we were talking about Mark, things that coming from real estate, the retail side. You've got like the future of real estate in focus. You want to, maybe that's an area, or ed tech?
Yeah, I mean, I think, I'm kind of beating the same drum consistently on education technology, but I think in the previous discussions that we've had, it is unquestionably the most exciting component of education. But I think the focus on it isn't necessarily purely focused on the education of children. I think it's the future of work component, continuous education, that I think is going to be one of the most exciting applications for it. Particularly when you start to get corporations involved in actual education and skill upgrading of their personnel. I think within schools themselves, again, at a point that I've made a number of times, this last year has been one of the biggest stress tests for education technology globally, on the back of parents having to teach their kids no parent wants to teach their kids, and they've had a greater insight into curriculum, how things are taught. And I think this is going to lead to greater questions being asked by parents about either value for money from the private school sector, or actually a real focus on how can technology be used to improve delivery of education and pedagogy. And I think there are a number of very exciting companies that are kind of coming out there, have proven themselves over the course of the last year. A lot of crap companies as well that will go to the wall, but have been well funded, and it will last longer than it necessarily should do. What else am I excited about? I think you pointed to the fact, Mark. We are as a house quite excited about the obvious COVID rebound. The sector or a play that we've been looking at even prior to this pandemic was the crushing of the commercial real estate market, the decline of retail generally, impact of Amazon, and then the generational shift that people have towards wanting to spend more time on wellness, health, well-being, etc. How do we capture that? What are the models that people are going to go after? And so we've spent quite a bit of time and put in quite a bit of investment capital behind a couple of concepts which are designed to capture that, and to work with retail owners and landlords who are willing to pay 50 to 80% of capex costs, fit out costs for our concepts, which obviously make our deal economics a hell of a lot more exciting. COVID has helped to accelerate that, frankly. We've seen a number of different malls, retailers in the UK, John Lewis, etc., going to the wall. In the US, Sears, JCPenney, all going to the wall, all leaving huge components of malls. And anchor tenants are basically gone. So we think there's quite an exciting opportunity there, and not necessarily in your usual East Coast and West Coast markets. We think the greater opportunity is in cities like Nashville, going to Dallas, for example. We think is an incredibly exciting real estate opportunity. So yeah, we're all in on that.
If you could do it in Ohio, we can get you funded from the state.
Very well. We are looking at Ohio. We are looking at a couple of sites there as well. Ohio is Cleveland, we think is a prime destination for a couple of things that we're working on. So yeah, we should talk about that.
Yeah, and Ahmed, I'd like to circle back with you on the real estate front too. Just involved in some of those markets you're talking about, and just anecdotally, I'm involved in a co-working company in the New York City area that me and a group of creditors actually put it into bankruptcy and cleared the balance sheet, and I'm bringing out of it. And we were able to renegotiate with the landlord a significant discount, which phases in over the next 3 and then up to 5 years. So I think there's a huge shift happening in terms of renegotiations on the office space and co-working.
To that point, I did promise you, Ahmed, we're going to accelerate the future of real estate.
Yes, please do.
But Eddie Vonderpart, do you mind? Because we were talking about health tech, you popped on. I'm just going to show a slide from your deck. Can you talk a bit about what you're seeing in health tech? I don't know if you heard the original question, but just a few words about health tech, what you're seeing. You're on mute though.
Sorry, Mark, can I jump in a couple minutes from now?
Yes.
I'm on something else. Sorry.
Hey Mark, it's Rob Colorini here.
Where are you now? It's like where in the world is Rob Colorini? Where are you now? You're in Florida. That's where I should be.
Yeah, you did Puerto Rico recently, so it's all good. But I'm in Miami Beach, and I just wanted to comment a little bit on Asia. That was interesting commentary around. I lived in Asia for 4 years, and then I served as chair of the Asia board for the state of Virginia for the governor. But I think, yesterday, for instance, Asia is so broad. The good news is people want to invest there, whether it's, institutional to the family office side, just because of the growth, the mass, et cetera. But I think one of the observations that we've seen, particularly over the last COVID recovery year, is just the unpredictability of systems. where places like Singapore and Korea were very tightly run, that worked very well in terms of keeping the numbers down. Just yesterday, we had a talk with, the second largest country in the world, with India. And I was surprised at the lack of progress. I thought they were doing extremely well with regards to the vaccinations, but I think there's a lot of, between processing and bureaucracy and the effectiveness and the numbers sort of trickling up. It's it's worth really putting some policy thought and some business thought to that. So I think the good news is, you have the traditional argument of both scale and also with the youth, but at the same time, there's still some Wild West out there as to things to work through to execute. I think a couple folks have made mention a little bit of some of the partnership issues and the like. So I'm just throwing that out there, and I got in a little later, but
you're hitting on things we talked about yesterday and even earlier. But something was really strange. You're in Miami Beach, and I saw somebody with a mask on behind you. That doesn't fit.
Yeah, and it's funny. I may have to put the mask back on. I had to take out some artificial food and drink to kind of to be on the Zoom. But if I put it back on, don't be rude. And Bill Deutschler, good to see you. It was good to see you in Palm City, and we saw different applications in Florida here of things. But I'm throwing out there to some of the Rob. I always enjoy your input from Asia, but were my comments in left field to you, or were you hearing some consistencies there, Rob Garrett?
No, I think a lot of what you said chimes. So sorry.
I see Eddie's back, but he's really good. He could be staring at and doing 3 different things. Are you ready to talk about health tech?
Yeah, sure. Sorry, guys. I was doing something concurrently, which is obviously strictly forbidden here. So health tech for us is very, very interesting. We think it's one of the major pillars that's undergoing massive change. Our first investment in our fund in health tech is essentially making the world for the consumer a stronger and better place by giving him more access to information, sort of decentralizing information a little bit. It's a company that has as motto a lab in every hand. Right now, if you go to the doctor and you are essentially having a test, it will typically cost you somewhere between $300 and $500 to get results of that test, being it from blood pressure to vitamin levels to cortisol levels to important metrics about your health, and this company can do it for 10. And we feel that we want to invest in making consumer a much more centric, a much more focal point of healthcare. And we think that there's a tremendous amount of money and tremendous amount of tech developments that are taking place right now that are interesting and are disrupting the market in many different ways. Obviously, the COVID has also accelerated the transformation of technology in education. It also has done it in virtual healthcare. We think that virtual healthcare is going to be one of the highest growth subsegments. And within that segment, the mental health care, which we talk about a lot on this network, is something that has been growing very fast, and we're looking for technologies and companies that are developing new tools that are driving change there.
That's great. Have we heard from everyone here? Just to make sure, or if anyone's at this point, let's go around. What people see 2021 exciting, scary, 2040 scenarios. Maybe back to some of the themes that
Mark.
we've heard.
Hi, hello everyone.
It wouldn't be an event without you, Simon. Welcome.
Yes, absolutely. We have a new guest, Susan Payne. Maybe we shall give her an opportunity to talk. She has an amazing experience in many areas, and she's going to be our keynote speaker at the Future of Work for Women. Susan.
Excellent. We met her just for a few minutes in the very beginning. Yeah.
Right.
Hello, everyone. It's been very interesting to hear from you all. I guess just from an African perspective, and my background is in emerging markets. I've worked in emerging markets for 35 years and has run trading desks in a hedge fund, and now I'm focused on Africa. But in Africa, certainly someone on this call has mentioned ag tech, and ag tech and food distribution is a very big business in Africa. The frustration for groups like myself and my company is that we do create enormous amounts of food locally to feed the continent and also could export. But there is not enough focus, I think, on Africa and what Africa can offer in terms of food. And there certainly needs to be much more support from a technology and a funding perspective there. But the trends that we're seeing in Africa are in digital, in telecoms, in creation of any kind of platforms. The entire continent exists on phones, frankly, and very few people have, or certainly a large percent of the population does not have a computer system. So, you're talking at a very grassroots level here in the development of this continent. But renewables, big business focus on renewables, food tech, and the opportunities there. Largely, this continent is focused on agriculture. In fact, most of the population of Africa is focused on agriculture, and the average age of citizens is under 24 years old. So 60% of the population is under 24 years old. We're talking about a very exciting demographic for any company that has a foothold in Africa. And I look forward to speaking about Africa and agriculture and the various opportunities offered on the ground there. But it is largely held back by funding and also by having business structures in place that give investors confidence to invest locally. And that has got to be addressed over the next 5 years, certainly more actively than it has been. A big focus for us in developing our different projects on the ground, and they're largely real estate and agriculturally oriented. But the big focus for us is finding, and I say this quite sincerely, is finding accountants that are capable in some of the countries that we're operating in. And there are very good professionals in many of these countries, but to get an accountancy team in place in southern Mozambique is quite a tricky situation. So we're talking about basic deliveries that can be overcome, but once they are, the continent offers just huge value and huge opportunity.
So, sounds like we should have your picture up here. Anyway, information for a while.
Yeah. Susan, this is Rob. I had a quick question to that. I lived in Africa 3 years, and we had 1,200 jobs on the ground on continent in computer circuits and transportation. Speaking of Asia, have you seen an increased role, and this is driven primarily from China, from Asia into Africa, or has it diminished?
Rob, you only on this call you mentioned so many countries in which you lived. I just counted you're 140 years old.
The Chinese influence in Africa is immense. It continues to grow while most other economies sleep. We are continuing to see a foothold that is increasing in Africa by the Chinese, and this goes from the fact that the Chinese own, frankly, most of the debt in Zambia. Just to give you an example, the Chinese have been very, very astute at lending and owning countries. And I'm not even going to say companies, I mean countries. I mean entire countries that they now have a stranglehold on and are pushing into. And we're seeing it in a very widespread fashion, from even cement companies in Mozambique to the teams that are on the ground at Maputo Airport in Mozambique that are building new parts of the building, expanding the building infrastructure. Across South Africa, I mean, we're seeing this widely, and that will continue to grow. I don't see competition coming in aggressively enough. I think this is a generational opportunity that is being lost to other countries. And I'm not sure if it's simply because investors feel that there is sufficient or overwhelming potential government corruption. You know, it can be, we can give a series of reasons why investment could be held up in Africa, but those reasons can be overcome, and you can deal with those if you have a commitment and if you have a will to develop a business on the ground. Logistics, for example. I mean, there's a huge opportunity for logistics in Africa. But in any case, yes, the Chinese involvement is growing.
Yeah, and just for a record, I don't have a problem with the Chinese. At the end of the day, as an investor or as a company holdco sponsor, you're going to want the lowest cost of capital on your debt. You're going to want the most optionality. So I think that I think it's Chinese the Chinese Development Bank is the entity that they use. So I think it's in all our interest to kind of maximize optionality. And it's up to the Europeans and Americans to kind of step up. So interesting.
And actually, even more than that, we're seeing this happen now beyond even the corporate world. I am now seeing Chinese citizens that are coming in to farm in Africa. So down the road from one of our projects, which is a very substantial commercial farm 200 kilometers outside of Maputo, there is nearby there's a Chinaman who's come in and said, why would I farm in China when I could farm here and buy land for a fraction of the price and have labor that is extensive and inexpensive? This is, for me, the best place to farm. And we're going to see more and more of that take place.
Well, part of it for us is having a chain of relationship and trust, and whether it's in Africa, and then you pick your industries. I'm sure we need to put more. You could help us catalyze that, Susan.
Absolutely.
Susan, may I ask a quick question here? The World Food Program, WFP, what kind of activity are you seeing from them in terms of partnering with the private sector, with the local farmers? Are they very active there?
No.
In Africa? No?
No.
And if not, why?
Okay, what one sees in Africa, and this trend is prevalent, is that you have funding that is given by certain governments, including the British government, incidentally, that is delivered through banks. The banks do not on-deliver it. And when they do on-deliver it, is it at rates that are so prohibitive at 12 to 20% locally that no farmer will borrow. So you've got that issue. Then you've got groups like the African Development Bank, which has the right will to support agriculture, or the IFC for that matter, or others, that require larger amounts of allocations, like $25 million and over, because the due diligence is such that they don't want to bother if it's less. So if you have a number of, and that is a very large sum of money for an African business, $25 million. Most African businesses want to borrow 5 million, 10 million. I mean, SMEs are largely 5 million. So they don't need to, their requirements are more limited, and there is nothing in place to satisfy those requirements in the SME space. But no, you do not see, there's no real evidence of delivery of funding or support from governments on the ground and international governments on the ground in Africa, unless it's to an NGO and unless it's to smallholders only, which I'm absolutely support smallholders. In fact, our projects are whale projects, and they support multiple hundreds and thousands of smallholders are supported by our projects on the ground, because we do a number of things to do that. We're the market, we buy their goods, we support them through different avenues. But what happens is that these larger projects also need support, because they are critical in more isolated rural areas to provide agronomy and a market when there's very poor logistics otherwise to multiple smallholders. So it really is symbiotic, and it's necessary to support larger projects also and SMEs.
My curiosity is more about WFP bringing in grains from Ukraine, Russia, Kazakhstan, Turkey. Well, not Kazakhstan, but Turkey, and bringing in those grains and the impact that has on local farmers. That's more of what I was in. How active is WFP in bringing in those grains?
Well, I mean, speaking personally, and I can't say that I've examined this closely, I have seen no evidence of this. And I've worked across multiple countries in the Southern Cone.
Okay.
What
Thank you.
Is Antler in Africa? Rob, do you know, or those that?
Yeah.
Because I spoke with them. We're
Yes.
considering.
Yeah, I introduced you to Andrew, I think, a few months ago. They're in Nairobi at the moment, which is their sort of launch pad into East Africa, and they just had not the World Bank, the IFC just invested in their East Africa fund.
Yeah, I see it now. They just and a year or two ago, they just that see for us, we have all these people that want to invest in deals, but to me, it's far more efficient to be in the new sets of accelerators and early stage venture. I want to have like a constellation of them. That's more impactful than TPG or anyone else doing a $2 billion. I mean, the farce. Remember, Stephen Burke, Blackstone's impact fund is almost identical to their regular fund, right? It's FANG stocks plus a few more. Maybe it's, if you really want to make an impact, you got to go, you can't put 25. I was trying to do something in Jamaica, which also the Chinese are present. And the IFC is like, well, just put $2 million, it's we can't really get out of bed for that. So who's going to provide that financing?
And frankly, I think that there's much to be said for giving it to people that are on the ground. I mean, that are trusted partners that are on the ground that can seek out the best opportunities and involve both large projects and smallholders in combination to focus on one and not the other. Agriculture is about creating scale. Without scale, you have a real problem creating the kind of outputs that are necessary to feed the continent. This is a continent that imports a vast amount of food and could support itself very easily, and that number is only increasing. It imports 40 billion a year now, and statistics are showing that this is going to increase to 120 billion in the next 5 to 10 years. So that's, these are large numbers.
Yeah.
And yet, if you support just the smallholders and you ignore this middle range, this SME group, then you cannot create the scale that's necessary to feed.
Yeah, but Mark, to answer your question a little fuller, before ESG became very popular, you actually had groups like the Gates Foundation, Bill and Melinda Gates Foundation, very actively involved, particularly in healthcare into Africa and other emerging markets. Then you look at, for instance, Bloomberg Philanthropies. Mayor Bloomberg, with his what's worth $45 billion or so dollars, he was the main sponsor of the U.S. Africa Summit. So some of these folks were very active, from an equity basis and a philanthropic basis way before, ESG became popular and Rise Fund, et cetera. So there has been some step up of leadership. I think some of it was for PR, some of it was for just, greater good, and some of it was for economics.
It's just the same with emerging managers. Once you're $1 billion fund, you're gone. It's autopilot, right? But what are they doing? I should revisit on the return structure. I mean, it's tougher. I'd rather back the emerging managers, and I think that's more impactful as well.
Yeah, I don't want to call out anyone who's may have spoken on this, but I'm hearing some people, not tonight, but on a previous call, saying we prefer to back managers with 15 years track record. We back the manager.
Well, that was that was out of the Middle East, and it's the who.
But interestingly, my point on this is out of the Middle East. I have a good friend, a guy called Fadi Gandour, who founded Aramex, and he's been a venture capitalist now for more than 15 years. He's the principal behind Wanda, which is one of the biggest ecosystem enablers in venture in the Middle East, and I'm very happy to invite him to come on a call here. And it's slightly apocryphal, and I'm sure he was spoofing people a little bit, but he stood up at a conference about 4 or 5 years ago, and he literally pulled his iPhone out and said, okay, guys, I've just pulled it up. Today I'm worth $450 million, and I have $75 million invested in the pre-A stage. What are you all doing to create an impact with your money? Because if I lose it, I'm still worth $375 million, and I'm still like 375 times as rich as a high net worth individual. So I absolutely agree with you. And getting money to the first time fund managers, I think a bit of life experience. Someone else was talking about, I was talking to the other day, the challenges of having a 28-year-old prime minister in certain nations in a crisis is, you need a bit of experience, but actually getting money to these first-time managers is really important. And there's a huge gap to close between funds that get to like $75 million ceiling and then the huge funds that are like $250 million. There aren't enough funds out there that are like 125 and cap out there and only want to go to a Series B and then pass the baton to people who want to invest at Series B through to, DEF. And then look, I see it in Asia. There's loads and loads of families, some that I've brought onto this, and they just want to invest in Series G and H and hold it for 4 months, an IPO.
So just so you know, what we're thinking is having these 2 or 3, at least on the banking side, just sort of co-lead venture. Just knowing that what you're doing is you're topping up 10, 20 million into a 50 to $75 million fund, but fund 2. And I think if we do a number of those, you got fund 1 performance, and then some accelerators. And then we create more of a, rather than entrepreneur, I'd rather have like 10 to 20 funds that we work with globally. I mean, Eddie, you're part of that. It's what you're doing with
yep.
And whether it's from seed to once they get to D, they don't need us.
If I may just jump in.
Sure.
So what's interesting to see is that early stage investment, even historically, the last few years, outperform later stage investment tremendously. So by 69%, according to Cambridge, for example, Cambridge Association Global Venture, and I think it's quite interesting. So you have seen a reversal here. If you came to Sequoia maybe only 5-6 years ago and asked for, I need $500,000 for my startup, they would just fringe at you and say, get lost, come back when you need $10 million. But that tune has changed dramatically, because when they come back today, the startups you see today with the strong network effects, the valuation train has left the station when they come to Series A or B or C. So Sequoia has, for example, changed their investment strategy and do much smaller and earlier stage investments than they've ever done before. It's because of valuation is created much earlier today. And I think that trend will just be strengthened going forward.
But their DNA doesn't really fit the early stage.
No, I agree. I totally agree.
We'll figure it out. I welcome everyone's input on this. In fact, Nitin, you just introduced us to a fund, right? Which we'll look at. Looking at a number of these funds, hopefully we'll get them.
Yeah, I did. And I may have a couple more that I'll send you. I just wanted to be thoughtful of your time and understand the process.
Oh, good. Anyone else? We've sort of gone over time, but that's not the first time.
So I don't know. I can also just double up on what I said. You know, the first fund, it's just a micro fund. The first fund, I started investing at VC, backed by Alex, for example. We have kept that going now for 3.5 years, less than 3.5 years, and we have had. I always wanted to have a seed focus, so early stage, and we have unrealized, of course, but 41% IRR conservatively, and.
But I do want to have we don't pitch here. That's the only.
No, but just the seed stage is, and I've done investments in Series A, which is I should have rather invested it in seed stage. Yeah.
Yeah, I do definitely want to have we're gonna have our follow up on this. Any other thoughts where we can educate each other? Again, tomorrow is today. It's at 10:30. It's all the world. We do get together. Just think of it. Every Tuesday and Wednesday, we get together at 10:30 for like our village town hall. The Tuesday tends to be I update, and then we talk about events that we want to do. And the Wednesday is when we actually go into breakout rooms and make it happen, like Africa. And then every Tuesday at 11, as many of you know, I was thinking actually, Stephen, could we once a month do it at 7 or 8 a.m. or where you do a version of it so that we get more of maybe if we do the monthly conference, but maybe the 2 weeks before the second week, we could just do an early version.
I'm up. So as long as the deck's done.
I get your deck at like 9:55, but you have to.
Yeah, we'll have to plan ahead on that one.
Okay.
Hey,
I
Mark,
think it's a good idea.
Yesterday there was in our breakout, there was an interesting topic that we haven't really discussed much, which is in the Middle East, the geopolitical shifts that are going on there and the changing alliances is something that's kind of newish, and China partnering with Iran, and the countries partnering more quietly with Israel, and how that's playing out might be an interesting discussion, because I think it has some pretty big implications. And then you add to that climate change and what it does to the oil revenues and what's going to play out there. So I don't know if that's a topic that others would be interested in.
So much for avoiding politics.
Well, there's economics too with that, so it's all together. You can't avoid it completely.
I know.
Hey, Mark, one suggestion I have is that, and you all have been above average on this, is on these topics. It's great that you have the mix of both geography, but then also, frankly, either generation of the family. I think it's interesting when you get sort of folks, sort of first generation and either second generation or even third generation, on that for both perspective. And you'd be surprised. Some of the first generation are actually very entrepreneurial and very open to things like angel and growth. So that's just my, rather than have a cookie cutter model.
So we're trying to do something that'll be hybrid from the Hamptons this August, where with both gens. But what I did in New York, we did our first next gen panel, and it was usually the younger, a couple older, but I was wanting to put them in 2 different rooms, film it, and if they're really saying, what they're saying, and then bring them back together, we could always do that virtually, where the older gens are talking amongst themselves, probably complaining about the younger gens and vice versa, and then they come back. But yeah, but oftentimes take Will Sternlicht, right? Barry and Will, and what the norm. I mean, I don't want to pick on them. Normally, the younger gen is the originator, and the decisions are at the older gen. And what you really want to know is you can spend a lot of time with the younger gen, and then the deal doesn't get done. You wonder why. So you need both, right? You need all. You need the decision maker. Sometimes it's the CIO. All in the room. And they don't, and they're trying to act like venture funds, right? What kind of systematic deal flow do they have? They can't possibly be a systematic. They could be Maverick, but that's why I think there's better model. Or take what I wanted to do was to bring in Soma, Anil Ranade, and Chris Adelsbach, and who you met in London, and they're like the new, for me, they're this blend, or what Eddie's doing, right? They're Eddie and Rich, they're bringing family office, let's say domain expertise and flexibility with institutional discipline. If you can find those situations, and whether at all stages, that's what we should be backing. Any other thoughts, Wisdom?
I was just going to say, Mark, that last point you made, that's the thesis of what I've been trying to do on the cannabis front. So couldn't agree more.
Excellent. Well, and that's part of it is finding more Anands, like who have domain expertise. That's how we can be better partners with all the funds.
We're about to start to grow cannabis in Africa in large scale. Speaking of cannabis.
I was speaking about that yesterday, Susan. We should link up afterwards. So
We definitely should.
Yeah.
We're waiting for permits in 2 countries to grow thousands of hectares of it. So good.
Interesting.
Whereabouts, Susan? Where in Africa?
Zambia and Mozambique, we've applied to licenses from each government, but they haven't been granted yet. They've gone through 2 readings in Zambia, about to go through the 3rd. But we're hopeful that both of these governments will, in the next 6 months, give us permits and we can start to plant. But the demand is there, and we're certainly seeing interest. And this is a continent that could grow this very easily.
Right. And what's the state of regulation there?
Frankly, it's unregulated because they don't know, they don't understand the product. And so we've had to go through a presentation of CBD and the difference between CBD and the differences of cannabis, and how you grow it, what we need to grow it, what farms can grow it. We would be the test case in Zambia. Our farm would be the test case in Zambia, and we're based in Livingston at Victoria Falls, which is where David Livingston used to grow cannabis, as a matter of fact. So it's a very good area to grow cannabis.
Didn't you tell me that the Chinese now own Zambia?
They do. I mean, they do, but the Zambians are still ostensibly in control. But the most of the debt is owned by the Chinese. And the Chinese own Zesco, which is the electricity company.
Right. So to Rob's point, we should probably be going to the Chinese for Silk Road-like backing.
Yeah. Yeah.
I was working on a $7 billion through we were all going to get 1% through a chain of a $7 billion project in Colombia. And it all was up, and then, which is a NATO country, and NATO put the kibosh on it. It was too big and too close. But it's what it is. Well, I look at that as like this is having our again, I was an Anderson partner. We need our geography heads, our industry heads, our asset class / service heads, and we all collaborate, and we all meet and do fun things like bobsledding in Austria, and then do deals and bring in thought leaders. And that's the one firm in this whole thing. I want to bring back Anderson, what we were doing. And
you should visit Mozambique. It's a beautiful place, Mark.
how did you go from Anderson to Mozambique? But but that's good. I'll go. But I was just told that the Chinese are there too, but I guess that's with the partner wherever they are.
I'm Philippine roots, but I'm not trying to bash the Chinese or anything like that. But Susan, the road from Kruger to Maputo, I hope the potholes have been fixed a little bit.
Yeah, a little bit. Yeah. In fact, yeah, we're not far from Kruger. You'll have to come and visit.
Oh, we owned a coal terminal in Mozambique at my old family office. So I know Maputo.
You'd be surprised, things like in Mozambique and in and some of these other countries. I mean, you have, the big telcos there, Orange Verizon, etc. How involved that they are, and then some of the Asian influence. But yeah, it's like I said earlier, it's interesting Wild West.
But Heineken has just opened up down the road from us. Huge facility. I mean, we're starting to see more and more come in to Mozambique. Certainly the southern region is getting very busy now, which is great. Good to see.
Well, I don't want to wait until May 11th to see you again, Susan. So if you integrated here.
Thank you for welcoming me.
The whole thing is not just, is you leverage us, we leverage each other. So if you want to get things done in Africa, we want to back people who are smart and systematic.
Yeah, I'm very happy to share thoughts on Africa because there's a lot going on, and I think there's a lot of propaganda and smoke and mirrors about what happens in Africa. I mean, Rob, just your comment about roads, it's so true, spot on. I mean, just if you're there, you can understand these things very easily, but there are vast opportunities for sure.
And just one quick thought. I'm appreciative also for Simon. It sounds like he coordinated your invitation to this, and it's great. Simon's awesome with that. The other thing I think you all have to deal with is going back to COVID and this, quote unquote, South Africa variant. I think it unfortunately puts a negative taint to the whole region or continent, and that's one of the things, Mark, that from a emerging markets perspective, that in the Western economies, particularly in the U.S., there's going to be a little bit of this, wow, this is from over there, and it's affecting us here, and I mean, those are some real, policy and communication issues that have to be dealt with. But for them to interpret the South Africa variant and hopefully, I believe technology will address that. And I'm fully vaccinated, but they warn you about the potential variants. It's just something that we have to think about on a regular basis.
Yeah. No, that's again, May 13th seems so long away, but that's our next virus vaccine update. Wow, it's really quiet. Everyone's muted. Well, let's. I'm gonna call it a wrap for the April conference. Thank you, everybody. Hopefully, this is again will catalyze many more things, and those that can make it come at 10:30, and push some of these other events along. Thank you.
Thank you. Thank you very much.
Thank you, guys.
All the best.
Thanks.
Thank you.
Take
Bye-bye.
care, everyone.
Thank you.
Very well.
My team, let's get back at 9:30.